Hello and welcome to the GlobalCapital Sustainable and Responsible Capital Markets Virtual Forum and today's panel on COVID-19 and social bonds. My name is McLellan and I am the editor of the SSA section of GlobalCapital. I'm joined today by a fantastic panel of SSA borrowers and bankers focused on sustainable finance. I'll let them introduce themselves and their institutions and then we'll get started. Antonio?
My name is Antonio Cordero. I'm the CFO of ICO, Instituto de Crédito Oficial. ICO is the financial agency of the Kingdom of Spain, mostly focus on supporting the Spanish economy through the financing of Spanish small and medium-sized enterprises. And ICO has developed an important role in the development of the social bonds as we started to issue this kind of products back in 2015, and we will have time to really discuss what has happened in the market for the last years in the social bond space.
Thank you. Eusebio?
Eusebio Garre, the head of funding of IDB Invest. IDB Invest is a multilateral development bank, the private sector arm of the IDB Group, committed to the development of Latin America and the Caribbean through the private sector, to working with banks, corporates, and infrastructure projects. We issued 2 COVID response bonds earlier this year with a $1 billion size each, and are in the wake of our announcement to commit to a $7 billion program to mitigate the consequences of COVID-19 in the region.
Thank you. Jarek?
Hi, my name is Jarek Olszowka. I'm the head of sustainable finance at Nomura. I sit in the investment banking division. And in Nomura, we have been active in the ESG bond market since the inception, starting from the first bonds in 2007-8. And recently, we've been, of course, very active in structuring, originating, executing social bonds, and a lot of them in the form of COVID-19 pandemic response bonds. So very much looking forward to the discussion.
Thank you. June?
Hi, everyone. My name is June Dumolard. I'm Chief Financial Officer for Unédic, which is the French institution managing an employment insurance scheme in France. It's a very important agency in the public welfare system and social and economic protection for the French workforce. And we've been especially active this year in terms of funding because of the global situation, pandemic situation, especially in responding with the emergency measures and support plan to help and ease the situation in the country in a very, very similar way as many other sovereign did in their own geographical landscape.
Thank you. Marcus?
Yeah, hello everyone. My name is Marcus Pratsch. I'm head of sustainable bonds and finance at DZ Bank. DZ Bank is the second largest bank in Germany. I work in the capital markets division, and we are helping issuers along the entire value chain of sustainable bonds, originating, structuring frameworks, marketing activities, and so on. We have been, of course, involved in a number of social and also COVID-19 related transactions. And in 2018, we also issued our very own first green bond.
Fantastic, thank you. And Siegfried?
Yeah, hello everyone. I'm Siegfried Ruhl. I'm heading the Funding and Investor Relations Division at the ESM. The European Stability Mechanism, in the past, we supported member states to overcome the consequences of the sovereign debt crisis. And earlier this year, we became part of the European response to COVID-19. While our mission in general has a social character, we haven't issued social bonds so far. Yet, with becoming part of the European response to COVID-19, with our new tool, the Pandemic Crisis Support Credit Line, we are now able to issue also social bonds. We published our social bond framework in June, and should member states request the pandemic crisis support, we will be able to use this to fund the support for the member states.
Fantastic. Thanks, everyone. All right, let's get started. Just wanted to highlight that for the audience watching on Hub, please feel free to submit any questions you have in the chat box below the video, and we'll deal with the questions in a live Q&A video just after this panel. So this has been a pretty tumultuous year for the social bond market. So perhaps just to set the scene for what things were like at the start of the year, how was the social bond market developing before COVID-19 hit? Antonio, you've been issuing the social bond in the social bond market for a while. Do you want to start us off there?
Yeah, thank you, Luis. Well, now looking back of what has happened in the social bond market, I can only be proud and satisfied of what we started in 2015 when we issued the first label social bond transaction, euro 1 billion. At that time, the sustainability market was dominated by the green market, but we at that time thought that we should expand the focus not only on environmental issues, but also in the social aspects of the economic activity. So we really made a big bet on the social front. So in fact, at that time, there wasn't social bond principles published. We used the green bond principles that were at that time valid. And published, but we said, hey, we are serious on that. We really want to develop that market. We understand that it deserves to be developed. And in conversation with the help of ICMA, the International Capital Market Association, we work within the next 2 years to publish finally in 2017 the first social bond principles. And I think this was a boost for the market to really start growing at a good rhythm. In fact, in the first 2 years of being social bonds, we show, according to Bloomberg, just about 2 billion euros a year. And it went up to 8 billion in 2017, or in last year, 2019, we had almost 17 billion euros of social bonds. And clearly, one of the reasons why we have this panel here is that this year, the activity in the social bond market has rocketed to more than 50 billion euros so far, and we haven't finished the year. So clearly, at the beginning, as anything that starts, there was little activity, but I think now the movement and the focus is on the social bond front. And clearly, what we are seeing in the capital markets is a good testimony of the sensitivity that we are having about the social aspects now because of the pandemic. But I think there's also another topics beyond the pandemic that are creating this sensation that the social bond market has to develop further, just because the society is being more conscious about taking care of all social aspects that we have to, or that we have in our day-to-day life.
Yeah, absolutely. Been a profound change over the past few years, and it does seem to be accelerating this year. Marcus, anything you wanted to add on that?
Yeah, it's exactly, especially in the year 2018 and 2019, we saw a diversification trend in the market, which we call green goes rainbow. That means the markets get a little bit more colored. We saw more and more issuers going beyond the pure environmental perspective of the market, expanding their activities also to social topics when it comes to funding. And we saw also some pioneers in the market moving to a broader agenda. Let's think about the European Investment Bank, who more or less opened the market with the first climate awareness bond in 2007. They expanded to the more broader sustainability world in 2018 with a sustainability awareness bond. And also in 2019 already, we saw an increase in social bonds of around 47% year on year, and also the sustainability bonds more or less tripled. And so this year, due to COVID-19, those segments received further tailwind.
Yeah, absolutely. The capital markets have responded pretty much instantly to the COVID-19 pandemic with COVID-19 bonds, and as Antonio mentioned, it does seem that people are processing their social responsibilities differently now. And as someone who's issued COVID-19 bonds, do you want to speak to how investors and how you are looking at your responsibilities differently?
Absolutely. In our view, the COVID-19 has been a wake-up call for many investors. On the one side, social bonds have been around for some time, and Eco and Antonio's team has an example of how this market has developed alongside the green bond market and to bring social topics in focus. But I think COVID-19 really made a clear case that social topics can be literally a matter of life and death. And that's really moved a lot of investors to actually become aware of the asset class and become actually involved. So we saw both in our two benchmarks interest from investors specifically about the COVID-19 purpose of our bonds and how we deployed the means, the proceeds, as well as in the aftermath of those bonds. We were approached by a number of investors asking for further COVID-19 and other social-related bonds. So in my view, it really has been a wake-up call and an event which has brought the topic of social bonds, of the purpose of a bond issuance beyond climate change to investors' awareness. And I think that is here to stay.
Yeah, absolutely.
I would.
Sorry, Jarek.
Yeah, I would also highlight to the audience that there's also we're seeing much more diversification in terms of types of issuers. So similar to green bonds, which started up historically as an SSA-driven market. Similar case with social bonds, and in the COVID-19 pandemic, we're seeing both financial institutions, we're seeing banks providing financing to SMEs to counter the socioeconomic effects of the crisis. So we're seeing banks issuing social bonds and also non-financial corporates. And I know we'll get to that, but I just thought it's worth highlighting that it's a much broader range of issuers nowadays.
Yeah, absolutely. Siegfried?
Yeah, I wanted to add something which is a bit in line with what Jarek said. Based on our experience, as I said earlier, our mandate in the past already had a social element. So many investors asked us to issue social bonds, yet we were not able, based on the framework we have, to really declare it as social bonds according to the social bond principles. It's, of course, investors woke up, as you said, Eusebio, and they now are more aware of this topic, but it also puts the issuers now in a different position and gives more flexibility on the issuer side to issue social bonds. Should we be asked for a pandemic crisis support? We are a good example. In the past, we couldn't do it. Now we can do it. And so I think demand was always there. It was a bit of lack of supply, and now we have supply and can bring this in a better balance now. And what is really good is that here European investors and European issuers are reacting quite quickly. I think this is good for the European capital market, which has already a huge share of the globally issued SRI papers. And this is an opportunity for the future, and we should continue to work on this market and let this market grow and develop it further.
Absolutely. Marcus, you wanted to add something?
Yeah, and also given the fact that the reaction time of the issuers was very short, it also shows that the social bond market and also the sustainability bond market laid the right foundation for the COVID-19 market, even if they are very young markets compared to the green segment, for example.
Yeah, absolutely. Jun, as another COVID-19 bond issuer, would you draw a distinction between COVID-19 specific bonds and social bonds referencing COVID-19? And what do you feel like has been achieved by the creation of these COVID-19 specific bonds?
I think just to broaden as many of the other panelists already mentioned, it's basically we answer to a need. The capital market just is a place where different needs meet between the issuers and investors. And as Siegfried very rightfully said, investors were demanding and asking and seeking for bonds and investment in general that would both meet their targets in terms of financial yield, but most importantly for the last few years with specific targets contributing to sustainable goals. And through the sustainable goals, we can basically share them between the social sort of goals that are targeted around people and the environmental goals that is targeted around the environment and the planet for the future. So which are the two main concerns in terms of sustainability and long-term goals that we want to achieve collectively. So the market was already getting mature. For Unédic, 2020 was definitely a very specific year, very unique, with a very hard situation where we had to very rapidly unfold a heavy issuance plan that was definitely not planned at the beginning of the year. So for us, the COVID-19 was much more a highlight of how we can answer with finance and capital market to help very massively on the whole French state to ease companies, workers, every workers basically. Some of them were salaried and actually employed, so not necessarily at risk in a conventional thought by many people in society. But we saw that when such a pandemic unfolds, it's everyone needs protection, right? Even the people who looks like they are protected or in a easier situation. So to us, COVID-19 is much more an event, specific conjunctural event that highlights the functions of what is a social bond or what is SRI finance in general. Because what's really, really important in this is much more the principles, and the principles are the same. At least the main methodology is the same for green or social or anything sustainable. It's basically you commit to the use of proceeds, how you're going to be managing them, who they are going to be going to, and then after that you also commit to report the results of your actions through bond issuance and the money you've raised and served to either the project or the measures that you're funding. So the whole methodology is really, really important. I think it's a time where the capital markets get much more structured and structured around something that is not necessarily just financial stability or yield or very financial aspects, but much more long-term goals, which are of course more difficult to grasp and to gather everyone around, but which are really, really important to the society today, as we've seen. So yes, it's much more. COVID-19 is a situational sort of a bond label, whereas the social bond or green bond or sustainable bonds are going to be there for a very long time in our view.
Yeah, I quite agree. On the topic of the standards, I mean, as a couple of you have said that the demand for instruments like this has been there for a while, but one of the big challenges is setting up standards to ensure that they're doing what they're supposed to be doing. With green bonds, I think for there was some easier metrics to deal with, because you could look at things like reduction of tons of CO2 emitted and that sort of thing. With social bonds and more specifically COVID-19 bonds, that seems like it's more challenging. Antonio, what sort of standards are in place for reporting on your COVID bonds?
No, Luis, what you've said is right in the sense that it's more difficult when it comes to thinking about reporting on social bonds, the impact of social projects, than when we are talking about green bond. This is maybe one of the main challenges that we have ahead, to really being able to give clarity and transparency to the market. But I think this is already started. In my experience, we've been working very hard with some other participants within the ICMA organization to be able to develop the social bond principles further. In fact, this year, in like June, it has been updated, the social bond principles, to really give more clarity to the sectors or the projects that could be included. But having said that, I mean, the challenge is there. The social concept is always, and it's going to be always, more vague than the green bond, where you have now very well established metrics to measure. Now we are in the process to really make a combination of quantitative figures with qualitative information that will, I think, make the investor community more confident about the type of product that we are financing. But I mean, the people that want to have the same degree of specificity, of clarity in the social bond impact report than they were used to have when receiving the green bond impact reports. It's not going to be possible yet by definition. But having said that, this shouldn't be something to be used as an excuse for not developing that market. The social aspects are, I don't know if more or less or equally as important, and the environmental issues need to be addressed. And as I told at the beginning, I mean, we are working on that route in order to develop the social bond principles further, to give clarity to everybody. So we are in the process. We are in the process of doing so. I think great steps has already been made. But clearly we need to there is a long way in front of us, so we have to work hard to provide more transparency and more clarity. But it's something that can be done. And to me, the key issue here is the combination of quantitative and qualitative factors, and for people, of making people understand that they cannot expect to receive the same degree of detail as they were receiving when talking about the green bond impact. So, I think we are in the right track for getting more confidence and more clarity.
Jarek?
Yeah, I fully agree with Antonio, and I just wanted to add that I think the role of the ICMA was very helpful. That at the very start of the COVID-19 pandemic onslaught in Europe, the ICMA very quickly reacted, publishing first Q&A, and then what Antonio mentioned, updating the social bond principles and clarifying that in case of COVID, the general population is the target population, and also by showing a number of case studies and giving illustrative examples, I think that was much needed guidance. Yes,
yeah, that I can see why that would be important. As is it almost a new asset class being established. Are investors' expectations of, I guess, rigor and clarity, are they different? Are they sort of appropriately aligned? Marcus, is that something you've found, or Jarek, if you want to speak on that as well?
Yeah, To be honest, we're of the more conservative view, and we think if you really want to attract the incremental ESG investor base, then you need to put in the work. You need to set up a framework. You need to get a second party opinion, do it properly. Especially at the beginning of the crisis, we've seen a number of issuers, and even now we see some issuers that are putting out bonds which are general corporate purposes bonds, and they just mention that among other purposes the proceeds can be used to fight the pandemic. And but I think these bonds are it's just using a label, but they don't differ in any material aspect. So we're firmly of the view, and I think we're seeing more and more the market move towards it. If you want to see either any potential pricing advantage or attract the dedicated specialized players, you really need to do it properly, I would say, by the book.
Yeah, as is the case with the green bond market as well, I suppose. Yeah. Marcus, do you want to add anything there?
Yeah, many, especially at the beginning of the pandemic, we saw a couple of unlabeled bonds calling themselves COVID-19 bonds. And the majority of the investors we talked to, they did a very deep analysis similar to green and social bonds, looking especially at the use of proceeds, also on allocation. And at the end of the day, they will also follow very much the impact of those bonds. So we see, let's say, similar criteria, even without existing frameworks at the beginning. And I think over the time this has changed. More and more issuers have used existing social or sustainability bond frameworks, or have extended their existing frameworks to some more health issues and so on. So the quality in the market has increased.
So at the start, there was perhaps an element of what you might term social washing, but as the market sort of matured quite quickly, and we've kind of got past that, and investors are already differentiating that sort of thing. Is that fair? Yeah.
I would definitely agree that at the beginning it was novelty, and I think at the beginning there was kind of everyone wanted to expedite and come as quick as possible, and there were a few examples. So I think for some, and we have examples where there were issuance framework established with a second party opinion to follow post issuance, and I'm sure June can talk more about it. And that was also accepted, but that was under a very expressly made stipulation that there will be a second party opinion, that there is all intention to align with the social bond framework and maintain the standards.
Yeah.
And maybe to answer on this specific topic, to situate how it went for us, as I said earlier, we've had to engage very rapidly in a emergency plan, funding plan that we had to involve very, very, very rapidly. So what we did is we issued a framework. We were very, very careful because we knew that the community was not going to be complacent, and that their expectancy was really, really high, especially with their ease and experience on green bond investing for the last few years. So definitely the fact that we issued the SPO, the second party opinion, a bit later on in the year, which wasn't even so far. It was like we actually wrote and engaged and committed to get the SPO before the end of June, when we issued in May. So it was not a long delay, but actually we've had many investors asking us why and what was the reason. So we explained that we've had some constraints as a public entity to even get these services. So there was a calendar problem that we had to solve, and we've had to reassure everyone that what we did was following the standards, and I can definitely attest that the investors community is looking closely at what we do. And I guess at the beginning of the crisis, we've seen many different types of issues with various standardization expectations and standards. So it was in a period where we saw many social bond, COVID bonds. I guess as we saw throughout the year, we're a big advocate to conforming to the standards and do everything that should be done, and even more so to comply with the principles.
Eusebio, would you like to add something?
Yes, thank you, Luis. Yeah, basically to add to what Jarek and Marcus said, I think what COVID-19 was interesting because there was a moment of urgency, like especially on the issuer side, all of public sector multilateral issuers were called to action. We wanted to show, because of our mission, that we were open for business. And willing to support the fight. So different issuers reacted in different ways. Some of them used existing frameworks. Some put in place new frameworks for COVID-19 or for social bonds, and others issued without frameworks. I think in the end, what investors want to see, on the one side, of course, the ICMA social bond principles are the guideline, is something, the point of reference and second party opinion are part of it. But to the core, the core of investors' questions in our experience was about transparency and accountability, which it comes down to your process, your framework. In our case, we have an impact management framework, which involves mapping every single project to the SDGs, identifying specific indicators, impact indicators for every single project, and reporting on a regular basis. In our case, we have an annual report, the Development Effectiveness Overview, where we report about our impact. And then this transparency, which in our case meant being clear about what do we mean when we say this is a COVID-19 bond. And in our case, there were 4 pillars: to alleviate healthcare concerns, to maintain jobs, to restore supply chains, and to sustain sources of income, especially for MSMEs, micro, small, and medium enterprises. And I think investors, that's what they eventually want to see. What are you going to do with the money? How are you going to report? And yes, ideally, is there a second party opinion? But again, as important as the formal aspects, and actually even more important, are the material aspects. How ready is an institution, a government, an agency, a multilateral to actually deliver on their promise? Because that's what you're doing when you issue a bond. You're promising to repay the money, and now with green and social bonds, you are promising to do something specific with the money, to have an impact. And if you have the framework, if you have the basis, then the principles of the second party opinion essentially wrap this framework and this infrastructure you have put in place as an institution to make it understandable for investors and acceptable for them to value bonds.
Yeah, absolutely. I just want to remind the audience briefly that if they have any questions, they can submit them in the chat box below the video, and we'll be answering those in the live Q&A just after this. Antonio, did you want to add anything to on this point?
I go along with what Eusebio said, that at that time we were in an emergency, and there was also an investor need to really get engaged in this or in being part of the solution of what we were seeing. So clearly, I think it's a great success that the capital market issuers were able to react, in different manners, because anyone has their own peculiarities about the situation regarding social bond capacity. But I think now the most important, this is not as relevant as what is going to come next, which is when issuers are reporting on the impact of this COVID-19 label bonds. This is going to be the real assessment of what the market is doing. So the fact of not having specifically social bond framework that allow issuers to issue COVID-19 label bonds, it's not really the important thing here. In the case of ICO, we were lucky that at that time we were updating precisely the social bond framework, so we took advantage of the opportunity to really include pandemic issues. But I see that the real assessment is just to come when we are reporting to the investor community about the impact.
Yeah, absolutely. Siegfried, you've had a little bit more leisure than some of the other panelists in terms of setting up a framework, but I suppose it's still been quite a rapid adaptation. What's the experience been like for you?
Well, when we set up the framework, we had some pressure because we didn't know if and when a member state will ask for the support, so we did it in a few weeks. And here I have to say, we realized that this market, especially with the ICMA social bond principle, is quite well developed. They are a quite good guidance for that, which is very positive. I agree on what was said about the uncertainty at the beginning. What is social, what is not social related to COVID-19. I fully agree with Eusebio and Marcus on this corrective element of the investors. They look at the issuances in detail and they give clear feedback what is acceptable for them and what not. This is what we experienced in our discussions around the creation of the social bond framework. Yet looking ahead, it's also important and an important responsibility for us as issuers that we develop this market in a credible way. It's in our interest. So I mentioned earlier that Europe has quite a large share in the globally issued social bonds. And if we want to maintain our advantage here, then it's important that we avoid this, you called it social washing, and that we as issuers act here in a responsible way and are transparent, clear, and really allocate the right assets and really the social assets to those proceeds. Finally, everybody will benefit from it, the investor and the issuer.
Yeah, absolutely. There's another topic I wanted to touch on, and that is, we've just had Luxembourg issuing a sustainability bond, which is, one of the first, the first European sovereign with a social bond aspect to one of their benchmarks. Obviously, Antonio and you're issuing as public sector agencies, but would you feel like there is an added value in the sovereigns entering the market as well, as indeed some have done for the green bond market? I don't know if you want to touch on that, Antonio?
I can speak a bit on this. Since we issued our own social bond this year, we've had a lot of attention from the political level and also the DMOs. We've been speaking very regularly on these topics. I think, as in the green bond experience or the green bond history, it's always a bit easier for specialized agency or some companies with a specific mandate to engage into this, because for them it's really, really strategic and it falls really very specifically on their specialized activity. And for us, it's one of the, I think today we've seen a new CADES transaction, which is an entity which is of course very close to us in terms of DNA. And once this provides a significant success and actual added value that is really, really measurable, and I think today it is the case, the sovereign gets interested, right? It's always going to be more heavy for them, sovereign or DMOs, to actually do the whole framework and meet all the expectancy and mandates from various forces. The decision-making process is longer. So for many, many reasons, I think it's natural that the sovereigns comes next. But I don't see any reasons that they won't. The sovereign's role as a funding entity or as an issuing entity is always going to be prioritized on social and environment from now on, because I think it's long-term goals which are really, really strategic for many of the sovereigns today. So yes, Luxembourg is also an example. It's a smaller state, and as such, I think it's maybe a bit easier for them to be more rapid than maybe other bigger countries.
Yeah, in some ways it does seem like a natural instrument for sovereigns. Jarek?
Yeah, but I would add that apart from Luxembourg, we've obviously seen outside the European Union, we've seen Ecuador earlier in the year issue the first sovereign social bond, and then we've seen Guatemala do an actually COVID-19 response-related bond. So kind of, I would say Europe on this one is actually catching up, and I would highlight that I also see a benefit for smaller states which could struggle in finding enough eligible green assets that doing a sustainable bond format would allow them to issue in a more benchmark size and not have the constraints related to low liquidity. So I think this might be a solution, but I think also ideally what we would like to see is the sovereigns who are doing either social or sustainability bonds having some kind of national development plans, that it's part of a wider story, how it links to UN SDGs, rather than just saying, okay, we're funding schools or hospitals, so why don't we just use it? So we would like to see this adding value using this format, not just throwing in existing projects that we're doing anyway and not having much additionality.
Yeah, absolutely. Does anyone want to add anything else on this? Otherwise, I think, sorry, Antonio, do you want to speak?
Yeah, just to reinforce the messages that has already been forwarded. The public sector, I mean, to me, is the natural sector to really step up and develop or increasing the activity in the social bond space. They have a wider social mandate than the private sector by definition. So sovereigns should really look at the possibility of issuing social bonds, because it's as already said. I mean, they have a clear social mandate, and maybe, well, it's not a sovereign for sure, but it seems that the European Union is going to be, or is likely to be issuing social bonds for financing the SURE program. So, yes, I think it's in the public sector where we are going to see more activity in the social bond market.
Excellent. All right. Well, I think we can leave it there and move on to the live Q&A. So just to remind the audience, we'll be switching over to the Q&A video now, and feel free to keep submitting questions in the chat box below this video, and we will get to them over in about 15 minutes in the Q&A video. Thanks very much. For today's Q&A session. I'd like to get started. I think we'll just jump right in. I'd like to get started with a question that I would have liked to address a little bit more in the panel, and that is how the EU is able to help develop standards for the social bond market, and and what your parts will be in that, and sort of how you're reacting to the EU's announcements in that area. So, Antonio, would you like to lead off there?
Yeah, sure. I'm of the opinion that the European Union may clearly contribute to develop the development of the social bond market by defining or to give more clarity to precisely what other market participants are doing in a private manner within the International Capital Market Association, different working groups, for instance. I'm conscious that obviously now the priority is to develop and establish the environmental objectives, but it has already been said by the technical expert group in their last report in March this year that social objectives should also be included in the future to have a fully developed taxonomy for sustainable projects in Europe. So, I mean, it's a matter of time, but I'm pretty sure that the European Union will eventually well, address the social issues beyond what they've already done, just mentioning in the taxonomy the fact of preserving well some social safeguards. But so yeah, I'm pretty sure that they will be engaged. Well, they are already engaged, but obviously, well, they have now other priorities. But yeah, they will help the development of the sustainable market for sure.
And we're expecting to see them emerge as a social bond issuer with the SURE program, which I think is now going to be in October. But do you think? I mean, investors seem pretty happy to buy social bonds without an EU framework in place at this stage. Is that, you know, with the assumption that the issuers will sort of adapt their frameworks when guidance from the EU emerges?
Well, it's not compulsory that there is a European Union framework on the social bond front for issuing social bond, as it wasn't mandatory to have the European Union taxonomy for environmental objective for issuing green bonds. But yeah, I mean, it's something that will naturally come, and yeah, we will have to respond to the investor request, to the investor demand to give transparency, consistency, and I think we all are really committed to well doing our best in delivering high level of expertise and trying to give them what they are expecting, which is more and more information and transparency. Yeah, sure.
Excellent. Anyone else want to pitch in on that topic? No, I think we can move on to the. So one of the questions here, we've just last week had Luxembourg issuing a sustainability bond. Are you expecting to see other sovereigns follow with social bonds? You know, they've sort of a reputation for leading the market, and so far it's been all, you know, agencies and supranationals and so forth. Do you think we'll see sovereigns entering the social bond market?
Yeah, but personally, I think we will, because now this is a much more bigger area of focus for investors. They have a better understanding of the product as a result, partially of the COVID response bonds. And so we've seen also, it's worth mentioning, Ecuador earlier and Guatemala also issue. And I think for sovereigns, it also makes sense that this will, especially for the sovereigns, allowed to reach benchmark size if they do, for example, what Luxembourg has done, that they combine their green expenditures together with social expenditure. So I see it as a useful vehicle, and hopefully when they come to market, it will be also part of their wider national plans, showing alignment, for example, to UN SDGs. But I certainly see a role emerging.
So, Marcus, would you like to add anything there?
Yeah, exactly. I'm the same opinion, more or less. I see this trend, green goes rainbow, that also the sovereign sustainable bond market gets a little bit more colored. And I mean, if you look at a lot of sustainability strategies of the countries, yeah, the SDGs are a very often used fundament. And I also expect this in the funding plans of the different sovereigns, that we move from the pure green perspective to a broader perspective, more or less integrating ESG as a whole and more mapping the SDGs. So I expect sustainability / SDG sovereign bonds on the rise.
Excellent. Okay, great. All right, let's move on to another question. So here's one. If COVID-19 has awakened investors to social issues, is there any evidence that this is translating into not just buying social bonds, but being more demanding about the social performance of all issuers? So sort of evaluating issuers as a whole rather than just the particular proceeds of assets. Eusebio, is that something that you guys have been sort of keeping an eye on?
Yes, in general, as a trend, we have certainly seen investors becoming more demanding and asking for more data, more transparency over time as they get more involved in the different ways issuers report. You get additional requests in terms of frequency, in terms of details. In regards to social bonds, it's fair to say that it's an asset class which is harder to standardize. I think many investors are still getting their heads around how best to aggregate data, how best to report data. And we haven't yet seen a lot of additional demands there. In regards to COVID triggering this, we are not yet at the stage of reporting. Investors are, as a matter of fact, they are looking into buying the bonds, and I think it's probably more months down the road that they will expect the first reports, and then we will see to which extent more detail is being asked for investors, specifically for this social bonds category.
Siegfried, anything you want to add there?
Yeah, I mean, looking at the question, I'm not sure if COVID-19 awakened investors. Have to protect the investors a little bit. I think, or what we experienced over the last 2-3 years, there's an increasing attention from the investor side on the ESG performance of an issuer. COVID-19 now, with the possibility also to satisfy the demand from the investor side in a better way, now brought it more on the table. But the focus from investors, the increasing focus from investors on the ESG performance of an issuer in general is there and has been there already prior to COVID-19.
Yeah, I suppose that's true. It has been a sort of developing trend for some time that bond investors are taking issuers' ESG footprint much more seriously. But related to that, that's a point that a couple of you mentioned in the main session. And this question here, the panel have talked about investors having standards and doing due diligence. But can you give any examples of times when they've said no to a deal or something investors wanted to include in a deal? Is this something that's actually influenced operations, I suppose?
I think from our end, basically, maybe we have to clarify. Most investors don't necessarily tell you in the book building process why they are not going to buy this specific deal. So, but we can certainly see that investors are discerning, and it's more on the positive side. The questions they ask, for confirmation that they're going to receive something they're expecting, rather than telling you, oh, I am not buying this because of that. But I would certainly say that some investors are very strict in their criteria, and they will reject deals if they don't fulfill their expectations or the demands. As a trend, it tends to be the smaller investors, the more ESG, SRI, specialized funds, who tend to be more picky and more selective from our experience.
Yeah, that makes sense. Marcus, Jarek, on the banker side, is that something you've observed?
Yeah, I would agree with Eusebio that it's not once we execute the deal, because that's a bit too late, and the feedback is not always forthcoming. I would say it's much more on the stage of designing a social bond framework when it comes to updates, or when we are doing investor work and on non-deal roadshows, or having kind of bilateral issuer investors discussions, that they will often voice to us that which direction is the social bond framework heading, what other types of projects, expenditures they would like to see. They question about indicators, metrics. So I would say it's much earlier than the actual kind of pulling the trigger and getting the deal done, because at that stage everything's in place.
Yeah, I can agree. It's more or less the decision of the investor at the end of the day. Sometimes we see that some investors are a little bit reluctant to buy a social bond because they believe it's not aligned with the overall social strategy of the issuer. So a lot of investors, they are more or less do a double check. Yeah, is it a social bond, but is there also a kind of, let's say, social issuer behind the social bond? So sometimes if they say, okay, this is from our point of view, not the social issuer, then they wouldn't buy the social bond at the end of the day.
That is interesting. So related to the last question as well, it's about the issuer's footprint as a whole, and that's something we're starting to see. Is that the case on the green bond side as well? You know, where it's not just the asset but the footprint. Another question has come in here. We've talked about a lot of reasons why this market can take off. So how big could it get ultimately? Could it be a substantial share of the bond market, given that much of government spending is social? Yeah, I mean, that was a little like the first question. A huge amount of what governments spend is eligible for is likely to be eligible for funding via social bonds. I mean, what's the limiting factor there? Is there likely to be a limiting factor in demand, or you know, possibly there'll be too many hurdles for some people to get over? But yeah, what's your, Siegfried, perhaps? What's your view of how big the social bond market can get?
I mean, a crucial question was already raised on this topic: in how far will sovereigns step into this social bond market? They have huge amounts of expenditures, social expenditures, and if we look at the current COVID-19 crisis, on average, if I recall it correctly, healthcare spendings now of sovereigns are in the area of 4 to, depending on the country, 4 to up to 8% of their GDP. So this gives a lot of eligible social expenditures. The question is, will governments use this? And also from a legal perspective, can governments use it? It depends also on national government, on national budget law, in how far social expenditures can be financed with via debt. In some countries, social expenditures in general have to be financed via tax. So there are also some legal hurdles, but from a perspective of eligible expenditures, I think there is a large room for this market to grow, and it would also be good for the European capital market if this market grows here. We have currently Europe has a leading function in this, and if we could further increase this, would be good for the euro and the European capital market.
Excellent. Anyone else want to add anything on that?
Yeah, I can add that, well, my gut feel is that, yeah, Siegfried said, there is, room for this market to grow if finally sovereigns decide to get into. But I'm of the opinion that it's something that we will see not immediately. I think now they have the priority of consolidate the activities they are doing in the green bond market. But I think that in some years' time, yeah, I think sovereigns will really participate in the social bond market as well. And yeah, we will at that time, or I would expect that we will see a massive increase in the volume of such a type of bonds, but not something that we will see immediately or in the coming months or quarters.
I mean, what we have to take into account, or what is a positive aspect, is it took sovereigns some time to enter the green bond market because they had to deal with the issue: how can we combine this with budget law and the way a budget works? Many sovereigns already found that way, and this can be, yeah, more or less copy paste function for the social bond market once the decision is made. So the implementation should be much easier and faster in case they want to do it, compared to the entrance into the green bond market.
I'll just add, to me, it will be also interesting to see whether any of the social bonds get cannibalized by sustainability KPI-linked products. For example, yesterday Novartis did a roadshow, and they're looking to launch a bond which has a coupon step up if they miss a KPI which is based on certain number of million of patients being treated in low and middle income countries. So this could have been done equally as a social bond because it's tied to healthcare, for example, or access to essential services. So it's more of a question because I don't think any of us has an answer here, but maybe we will see some KPI-linked structures with the sustainability-based targets and KPIs linked to social performance, not just purely green.
Yeah, that is a very interesting topic. The bonds which have instruments which have financial incentive for performance. It's not something we've seen a lot of in the SSA space. I'm not totally sure why that is. It's more been a corporate product, I guess, with loans and so forth. Jun, anything you want to add on that? Is that something that you've considered or discussed with investors?
Familiar with the logics and the needs for SSA issuers, I think. Prime reason is that we usually share, as I said in the panel, social mandates or general interest mandates, which are, I think, a bit difficult to link with performance linked or to organize coupons or payments or financial performance around impact metrics or these sort of targets. I'm not sure it's very adapted to us, but we can view it as a side sort of development from other asset classes and other types of issuer.
Yeah, I think from our point of view, KPI-linked bonds are certainly interesting. And as a matter of fact, we at IDB Invest just advised one of our clients and invested in what ended up being the first KPI-linked bond issued by in Latin America by one of our clients, Banco da Vivienda. I think in regards to issuers from the SSA sector entering that space, one of the big questions will be to assess what is the premium investors are going to accept to buy into that optionality, because essentially you're giving them an option for a higher coupon, but is there a premium attached to it, or do investors expect to get a free option? And that I think those conversations are yet at the very beginning, but that's something which needs to be figured out before the SSA sector starts developing that instrument.
And a slightly unusual incentive structure in that higher coupon comes with a failure in KPI. So it's a slightly strange moral question, I suppose. Marcus, is that something that what's your perception of the interest from investors in that sort of area?
Yeah, I mean, we see more and more, especially in the corporate side, and especially when we talk to smaller and medium-sized enterprises who don't have, let's say, enough sustainable assets, but want to also enter the sustainable funding market, but more focusing on their overall strategy, that they are very much interested in this KPI-linked or target-linked structures. One thing, we are a little bit at the moment suspicious of is the ECB eligibility of this ESG-linked bonds. This is something, what we have to discuss, and where the ECB has to change its mind at the end of the day, because some issuers are, of course, a little bit too reluctant to issue an ESG-linked bond without ECB eligibility.
Yeah, that makes sense. All right. Is there anything else anyone wants to add on that topic, or anything we haven't touched on? No, I think Jun, just as you joined a little bit late, I wondered if you wanted to add anything. We were discussing just before you arrived about if investors are beginning to be a little more discriminating in terms of the issuer's overall footprint, and if you've had any examples, or if you're aware of any examples of investors, saying no because they're actually not satisfied with social bond or green bond frameworks.
I think we've had a very, very busy year. with various amounts of documentation regarding these frameworks and structures around the bonds issued. A lot of bonds too, so a lot of data to analyze and to digest. So I guess we've had various cases where some investors would say, haven't had time to digest it all or to understand everything, so we need a bit more, maybe a meeting, or we need to ask a few questions, which is a really good thing. I think it addresses the lack of understanding, and it provides with a lot of clarity on our business models and what we do. Some others would just right out say, seems good, we've heard it's good, we trust the SPO, or we just have confidence in the third-party providers, be it the community or some specialized agencies, and they would just trust them, waiting for the time to be able to digest this whole mass of information. So yes, I think it's really interesting to see how investors have organized their capability to analyze the framework and make it a financial investing decision based on it, and how advanced they are in terms of comprehension and yes, understanding. But for many of them, they have carefully read the frameworks and they have very specific questions. So I think it's, all in all, just as said in the panel earlier, it's a really, really good opportunity to also be a bit more, have more clarity in terms of information and the explanation about what we do.
Yeah. Also for you, Jim, I wanted to ask as well, we were discussing the possibility of social bonds from sovereigns, and obviously there's a lot of potentially eligible government expenditure. For France, though, I mean, France has you, CADES, ACOS. Is the most appropriate level for social bond issuance with agencies such as yourselves, or is there a role for the sovereign to lean in there as well?
I think AFT, the French Treasury, DMO, has worked on the green bond aspect of things earlier, which is natural, and they were one of the first big sovereign to issue such a massive green bond. Then on the other side, in France, the organization of the public sector revolves around a few agencies, and as you said, social protection is covered by either CADES, ACOS, or Unédic. So it's fairly natural that we sort of are moving forward with these ideas and these innovations, or just get on the right level in terms of structuration and work on ESG finance. But we definitely have a close relationship together. We are all part of the public sector issuers, so we communicate a lot. I think it's also a very good opportunity to work together through different types of agencies. And I think many countries have this question of coordinating the different issuing agencies correctly. And for us, ESG finance is the right place to meet, because we can definitely speak and work on improving the system as a whole for the nation, rather than sometimes just try to push our own interests. It's so new and so pioneering that we work a lot together to try and find how we can fit in the ecosystem and provide with added value on these initiatives.
Excellent, thank you. Anything else anyone wants to add? No, I think we are good. Well, in that case, I think we will wind up there. So I just want to thank all my speakers, and thanks to all the sponsors, and thank you to everyone watching. Thanks for joining us for the second day of the SRI Virtual Forum, and the forum will be continuing at 9:25 British UK time tomorrow morning. So thanks very much for joining, and thanks again to all my speakers.